RJTI charts versus. I wish I could say to President Biden, or Mr. Biden for some, and say to Jerome Powell, Janet Yellen, and especially say to. But first, remember, stock and options trading carries a high level of risk and can result in the loss of all of your investment. As such, options trading may not be suitable for all investors. You should not invest money that you cannot afford to lose. RJTICharts.com is an algorithmic-driven firm that utilizes such methodologies to help us identify, buy, sell signals for any stocks, ETFs, futures, forex, crypto markets. Our market experience is well over 40 years. Our information provided on this video is for information purposes only and to highlight our methodology. And if one decides to act on such trading signals, you're doing so at your own risk. We aren't giving you investment advice. What our algorithms afford us is the ability to see things from a different angle than just looking at the fundamentals such as earning reports, etc., to understand the economy and to interpret what may just lie ahead. What we are going to do is present is an actual mock letter we sent out to our subscribers with the intent that it would hit President Biden's desk. So let's get started. 8 months after current president took office, President Biden, we sent out on 8/18/2021 at 11:23 a.m. Central Daylight Time. Subject, RJTI Church wish I could say to President Biden or Mr. Biden to some, and say to Jerome Powell, Janet Yellen, and especially say to. We wrote, oh, it's just so many bulls out there like Jim Cramer, Rick Santelli, Courtney Gibson, Jim Paulson, Josh Brown, the twins, Goldman Sachs, JP Morgan Chase, Fidelity, Vanguard, BlackRock, Gabelli, Oppenheimer, Omega Asset Management, Paul Tudor Jones, and every other optimistic organization or guru who have stamped their opinion over the last 2 to 4 years. But as I speak indirectly to President Biden or Mr. Biden or whatever you prefer to call him, I want you to keep in mind that those mentioned above are so blind to what's coming, and truthfully, I believe are just culprits and will experience a day when they will try to explain to you why you should hold on, what they couldn't see, scurry to make sense of the unfolding, and we will watch them muddle through what we saw, and undertone will be echoed. RJTI Charts was right. So the time will mark the day of a great decision. Yet, I want to write this letter to President Biden, and I'm just giving readers a chance to see the speech I hope gets to the president, so read on if you like. I don't know if it will ever find his desk, but first, I will start off by saying I apologize for you becoming president at a time of great underlying mysteries that lie ahead. I'm sorry that you have inherited something that most believe is not chanceable and a stupid outlook tomorrow. I'm sorry that there is a very high probability such will be experienced under your reign. You see, Mr. Biden, you have come aboard after one of the most ferocious rallies ever seen to go forth, in my opinion. And this rally has all of the signs that it will continue for a while. Many can only see higher, and we agree that a further rise for the Dow, S&P 500, NASDAQ is possible, but we also are not delusional as many others are we've mentioned at the beginning of this message. And we completely understand, as we stand guard, that optimism can create illusions. And I promise you, Mr. Biden, you have taken on and taken over a boat of some severe illusions implemented with skillful and artful hands. What were we referring to when we said ferocious rally? This rally below for the year 2021. And we continue to say to Mr. Biden on 8/18/21 in his mock letter, one might ask, as you might also, Mr. Biden, how could it be with the following been on the table? Yet, it's not the following that will cause this event, and yes. No, it's not your infrastructure plan that should stimulate the economy and markets, and it's not that the unemployment rate isn't shrinking. Also, it's not that Treasury yields are not relatively low right now. And it's not that the injection of $1 trillion in the form of stimulus checks to the needy or other forms of subsidies that rerouted funds back into the economy. But I must admit, I need to get this off of the table, Mr. Biden, off of my chest. You do have an incompetent FOMC Chairman Jerome Powell and the members he serves with too. I apologize for it, but I'm just telling you how I feel. For they are very smart people, but are clueless. Yes, I like Janet Yellen, and she is my choice of the group, but unfortunately, she doesn't have the talent of the eagle eyes which sees from great lengths. And also, Mr. Biden, it's not your child credit, which is an issue that was implemented. It's not that inflation isn't contained for the most part. It's not that companies aren't making record profits. Oh yes, they are making record profits, and it's not that. Also, it's not that there aren't more jobs out there than most people who want to work, but maybe that changes when the augmented unemployment compensation ends in September 2021. Also, Mr. President, I imagine many Republicans and Democrats are eyeballing your spending and maybe a little reserved. But the Republicans may be the most negative on your actions, and I promise you, there are underlying reasons why such a fight to not pass your plans or work with you lies beneath the surface. But I don't want to give any congressional party credit. For what we are writing you, Mr. Biden, to say is again to talk about the eyes of the eagles, which are very talented. Who eyes? RJTICHARTS eyes. Our algorithm eyes. And we just can't support the idea that congressional parties can see this coming on a large scale. Our algorithms are saying, hey, something's coming. Including not just the Republicans, but the Democrats too can't see this coming on a large scale. That is to come. So, Mr. President, I imagine you are starting to get an idea of what I want to write to you about. And again, I apologize in advance for none of this will make sense to the fundamentalists. You know, the guys that, looking at earning reports and COGS and this and that we mentioned initially, who are some of the smartest organizations and gurus on Wall Street. Yet, it is going to baffle them and many non-expert market participants too. In my 39 and a half years of following markets, participating or watching every major move in the markets since the year 1982, there has never been a time where I haven't seen identical evaluations not eventually have the same outcome. Our evaluation being our RJTICHARTS algorithms. Remember, anytime you make claims when it comes to markets, you better be able to back it up. And RJTICHARTS can and will be illustrating our documented facts in another video message, so stay tuned. We went on to say to President Biden, in my 39 and a half years of following markets, participating and watching every major move in the market since the year 1982, there has never been a time where I've seen identical evaluations not eventually have the same outcome. This methodology was mine back in 1987, and the 1987 crash, which I was standing right in front of the S&P 500 futures pit on the CME exchange holding my handheld Sharp PC 1500A pocket computer. Then, the year 2000 demise. Oh yeah, we called it. I still have the documentation where we called for a bear market. Then, the year 2008 crash, which we showed our sell signals from our methodology that were between the months of October through December of the year 2007. Sounds like to me that's before a crash. And let me add, the signals are as clear as a sunny day on our algorithms model. Mr. President Biden, I also sent over to many parties that a down was coming before that hellish last quarter of the year 2018. And yes, part of that list was CNBC. As we also went on to stamp our accuracy in picking the top selling area for Apple, Netflix, and many more. But Mr. Biden, I think our greatest accomplishment is what we projected for the year 2020. Mr. Biden, between the months of March to December of the year 2019, we forewarned that there was going to be a severe drop for the year 2020. And surprisingly, we instilled the idea that a black swan was coming for the year 2020. We didn't know what it was, but we saw that a black swan was going to take place. And we looked for the Dow Jones to dump at least 10,000 points. I'm going to say that again. And we looked for the Dow Jones to dump at least 10,000 points. I think you would be hard-pressed to find any guru or organization, whether it be Goldman Sachs, JP Morgan, Warren Buffett, who can match our timeline. We commenced that a black swan was coming for the year 2020. Sidebar. We heard the majority of investors, gurus, believe no one could have known about the coming 2020 crash. But in our next video, we're going to show that that belief from others was a fabrication, because RJTICHARTS clearly did call for the decline to unfold in the year 2020 derived from our algorithms, our powerful algorithms that you can follow. Let's continue to exhibit the mock letter to President Biden. Of course we're laughing, Mr. President. You are so funny. We didn't know it was going to be labeled COVID-19, but my, how it impacted the whole world from coast to coast. Not necessarily in order, but Africa to Italy to China and Europe. Actually, should really be China first, but from Africa to Italy to China and Europe to Australia and Russia and to this great nation of ours, the United States of America. President Biden, yes, I'm a black American. Again, this is the greatest country in the world. I'm proud to be American. Undoubtedly. Mr. Biden, do you know that this world event was the pure definition of what is noted as a black swan? And did you know that we went on further to focus on our next projection, that another black swan was embedded in the markets during the time in the middle of the year 2020 to the end of the year 2020? Absolutely. It's documented. And now the current push is harder to get more people vaccinated, and talks of another booster shot surface. And the reason it is that we have another black swan that surfaced, and it is called COVID-19 variant. And unfortunately, my reasons for writing you today, Mr. Biden, is that you're going to have your hands full for another black swan lurch too. Now, hopefully you get the picture that our accuracy can be highly favorable when it comes to forecasting. Absolutely. Who can't be wrong? And we definitely can be wrong. But as you can see, well, we have a pretty good batting average. And we definitely have the eyes of an eagle that so many others wish that they possess. Our algorithms, our methodology. Goldman Sachs, JP Morgan, Jim Cramer. Yet, They don't need no validation from us because they've proven why they are some of the finest organizations out there on the street today. Okay, and fine, Jim Cramer. I tell you, it's one smart cookie. And I'm not telling you anything new, Mr. President Biden, because you probably already know such accolades are due to these fine organizations and personalities. Yet, Mr. Biden, they do not have tools to see past the forest. They do have tools to see past the trees to see the forest, but they just don't have our market tools to see behind the forest. So you're not going to get many to write to you talking about the troubles that lie ahead for you as president. Here's your problem. While under your reign, you have subjected a have on your plate in the coming time. Again, it has nothing to do with good policies or this dividends or growth or fundamentals like CPI or the unemployment figure or whatever, or this or that fits into the category of good for the economy. That's a fundamentalist view. We will say, Mr. President, your path of economic growth and prosperity for America, yes, it's spot on. It's a matter of opinion, but it seems to be spot on. And any president, whether it was President Trump or President Bush, who sought to implement similar programs, would have inherited potential growth to come from such installations. So, we feel this is true, but in spite of, your programs are coming at a time according to the calm that comes before the storm. It was expected that after the year 2020 debacle, a series of events for the good would be implemented to further help the economy gain ground and seek to gain normalcy. Yes, this was factored into our analysis of our algorithms. But your problem, President Biden, is that you're building growth on unreal numbers and evaluations. But it's not your fault. Yet, this is true that you assume a true foundation or underlying sand foundation that started in 2008. You probably know this because you were part of Congress at that time. But yeah, underlying sand foundation that started in 2008. But became very pronounced between the years 2016 to 2020. Especially what has happened in the market since the year 2020 and continues to hold the illusion that such building on a foundation from year 2020 bounce is solid in its form. Mr. Biden, this is a lie. Mr. Biden, this is a lie. Mr. Biden, this is a lie. And the methodologies implemented to create this illusion becomes more delusional. I mean more delusional, more each day as markets like the Dow, the S&P 500, the NASDAQ 100 makes new historic contract highs again and again. President Biden, it's not the fundamentalist fault. But it is the exuberant behavior of many who continue to ignore that when it comes to markets, certain things must be in place for sustainability to have a good chance and solid results for longevity. And when such applications are done correctly, helps to reduce the risk that we don't wake up one day and a 10% correction turns into a 50% correction expeditiously. So, what am I saying to you, President Biden, is that you are subjective to the risk that under your presidency, all hell is more than likely to break out. Why? It's because of the elasticity of the rubber band that has been stretched beyond the normal bell curve. And this ideal to justify the unnormal continues to be inherited by who? unwavering bulls who vow to ignore such unreal numbers, and they make such unreal numbers valid, although they know they are negative and have absolutely no value. Yet, unwavering bulls deem it so, and because they speak it so, make it so. But the truth of the matter is that I can make a cake out of mud and say that it's chocolate cake. But that doesn't make it so. But when conformity is at its height among many bulls of valor, and you listen to such projections that it's a chocolate cake so many times, if you're weak-minded, we're not weak-minded. If you're weak-minded, and absent of the tools to argue against, we've got the tools to argue against. And absent of the tools to argue against such repetitions, oh, the market is good, oh, the market is great, oh, the market is going to keep on moving higher. Those type of repetitions. Then you start to believe, if you're weak-minded, yes, the mud is a chocolate cake. As many find themselves victims of conformity to the idea, you're right, it's a chocolate cake. But Mr. President Biden, we got tools. And I'm here to tell you that RJTICHARTS loves chocolate cake. Matter of fact, Mr. President, RJTICHARTS is a connoisseur of chocolate. And I'm here to tell you, mud doesn't taste like chocolate cake. Not today, not tomorrow, not in the future or whatever. Mud doesn't taste like chocolate cake. So, it is because of our prestigious tools, our algorithms, who, like our palates, is also a connoisseur of being able to see past the trees and behind the forest to see what most cannot see. How else did we successfully forecast the coming of a black swan if we couldn't see like an eagle? It is our algorithms who is tasting the blood bath to come under your ring. And we apologize for your pain in advance. What could it be? The culprit is a potential sucker punch from afar, another country that initiates the beginning of this downturn, or it could be the energy sector plummeting that carries the stock market lower too. But the largest factor is physics. Physics has been violated unmeasurably over the last 1 and 5 years. Excuse me. You see, physics is effective and such because the components that cause physics to implement its goal assignment is done so because all of the variables of physics, all of the variables of that action involve work as one unit. There are no disconnects in the circumference of a physics action. And because there lacks no failure of continuity connections, as physics works feverishly to obtain its goal, it works with the power of completion in its journey. Break it down. When physics has put forth an action, we can detour to a certain degree, but it is a law among and above what man tried to do. And so it's going to find a way to get to its assigned destination, whether it has to be coming around the corner, under the table, over the table, or from behind the table. It's going to get there. Only thing that we can do is try to postpone it, because physics is law. So, what we're saying is that, Mr. Biden, this is another of the worst rises we have ever seen, in our opinion, as the markets tear higher without any regard for structure. Structure matters. Structure matters. When it comes to chart structure, it matters. When it comes to fundamental supporting structure, it matters. The same issue came after the hellish quarter of the year 2018 and presented this unstructured foundation all throughout the year 2019. But you know what? The bulls ignored it. The bulls ignored it. Either because they didn't care or just couldn't see the damage they were implementing with their buy at any cost approach. I don't care. I just need to buy. We need to get in. We need to put this money to work. Buy. They didn't care how they did it. Yet, upon identifying the out of alignment from our algorithms, yes, our algorithm was like, oh really? And our algorithm's readings only helped us conclude that it was going to take a black swan, a physics action to repair such unattached patterns as the market was rising in the year 2019. So we watched it. We're like, oh my God, look what's going on here. But Mr. Biden, this present one, is even worse than the year 2019 patterns of disconnect. Present one, meaning year 2021, is even worse than the year 2019 patterns of disconnect. And because of such, the day is marked when physics, again, is predestined to correct things back to normalcy. So what are we saying? Hey, listen, these guys are riding this market like there's no tomorrow. Okay, there's a normalcy that's going to come. And it's not to the upside. So, we point out where the stock market should retreat to once things unfold. Where does this revisit lead to? Is about 28,000 down, if not 19,000 down. The S&P 500 to 2,900 level, if not 2,200, roughly. And the NASDAQ 100 respectively to such related levels. So, Mr. Biden, gold and precious metals along with treasury prices are going to soar. But the equities are going to head lower under your reign. And yes, I would not be surprised if China was leading the buying of gold when such unfolds. But Mr. Biden, I want you to hold your head up high as you get baked and smothered by political parties, especially the Republicans. I personally could care less about a political party. Yet the Republicans are going to chatter. He spent too much money. He tried to do too much and this and that. You will be made out to be the bad guy. But hold your head up high, for it will not be your fault. It is the greediness of bull fund managers who created this bubble. And the demise, for they cared not about structure, but only profits. Also, an FOMC who was too afraid to take their hands off of the markets and let supremacy win the day from a fight between bulls and bears so that the market could find its true real value and work toward the future from the conclusion of such battles. The FOMC continues to fight on behalf of bulls as they throw more weight on the side of the scale to prevent bears from having a fair chance to bring about real value equilibrium. I've seen it all. I understand it. Our algorithms understand it. You tip the scale, you're changing the dynamics. It's about equilibrium. It's about, hey, if I buy and someone's selling, it needs to be free, that the market can find its true real value. But the FOMC helped to keep the weight on the bull side, that it became an unfair game in so many ways. It also is global calamities that are to stick a dagger in your side too. Because most countries, even though they want to give this illusion, don't have the powers to be able to sustain like us, or they lack resources to keep up the illusion that everything was fine or is fine. And it will just cave. It is the flight to quality to treasuries. Hey, when this thing unfolds, oh yeah, treasury prices going up and treasury yields going down in spite of what the Fed might do. And the flight to quality for treasuries, and a great possibility that as other countries slip back into the negative treasury yields arena, so will the U.S. spend lower for treasury yields too, and might even go negative too. Hey, we know something about the treasuries. We call for historic lows treasury yields in 2014, and we did it again in 2016. And we maintained that posture until 2019. And even though we advised against not letting interest rates be rise, the Fed did it anyway, but that's okay. They won't be able to control this. Yet, Mr. Biden, you must hold your head up high because you inherited this garbage. This misalignment from greed and the failure from many who said that prices are soaring, yet it's merely illusion simply driven from greed. Here's the truth. In the year 2008, our algorithms read overbought around the percentage of 240 points, which was 140 points above the normal bell curve. And the other demises in the market for the year 2000, third quarter before the fourth quarter hellish year 2018 drop that we call, was hovering around an average of 205 points, which was 105 points above normal bell curve. Whose bell curve? Ours. The ones that's looking at this. Not someone else's, but our algorithms. But coming into the year 2020, we had a reading of 272 points overbought. The same year you came in. Overbought conditions a whopping 172% over the normal bell curve. Mr. Biden, you've inherited circumstances that are unimaginable. And on the first day you took office, our overbought reading was 239% overbought. And as of now, based on the year 2021 readings, okay, are you ready for this? Okay, here it goes. The current reading we are getting from our algorithms as of August the 17th, 21 is 382 points, which is 182% overbought. This is the highest reading that we've ever seen. The highest reading ever. And what is even more scarier is that it just may even go higher. Because who's most? Most bulls. The ones that are just in there buying and buying and buying and buying. Keep buying because they still don't believe that the markets are extremely overbought. We could reach a reading of 430 to 440 points overbought conditions, which would be 230% to 240% overbought above the normal bell curve. Our normal bell curve. Our algorithm's normal bell curve. That's ringing the bell. Oh my God, what's going on here? Watch out below. This reading would be produced with the S&P trading in a range between 4,600 to 4,900 price level. Range. So, Mr. President Biden, again, this isn't going to be your fault. But as President of the United States, your days are going to be heavy. Yet, it is necessary for this to happen that an alignment of the stars scenario plays out in a manner that it should. Well, what kind of alignment of the stars scenario are we talking about? We're not talking about Jupiter. We're talking about our algorithms. We're telling you that our algorithms are totally out of sync with what the market has done and what the market is doing. And they must come back into alignment. And the only way that they can come back into alignment is that things must be corrected. For Mr. President, Mr. Biden, what else can we write to you than what we have written? Okay, RJTICHARTS concluded on 8/18/21. In our analysis of looking over 100 years of data of all asset classes, we have never seen any markets where solely based on our algorithms readings or overbought conditions at a level of 182% or potentially climbing to 230 to 240% above the normal bell curve has never failed to produce from such extremely overbought conditions. We're saying overbought conditions that are present right now that didn't lead to unfavorable market conditions. Frankly speaking, the reason we haven't seen it from any previous research, our algorithms, is because it just has never happened before. Whoa. The first time ever with our algorithms, it's never happened before. And so how could we have derived a different conclusion than what we have? Since our mock letter to President Biden, Mr. Biden sent on 8/18/21, the S&P 500 topped within our forecasted range of 4,600 to 4,900, which is a high of 48,1862 high. 4,818.62 high made on January the 4th, 2022, and has fallen, here we go, has fallen a whopping 1,327 and 4 points lower. Thus far, the Dow Jones 30 fell 8,291 points and 8,291 and 71 points from its year's January 5th, 22 high, 36,952.65, and came just short by 661 points of hitting our downside target, which was 28,000. A target that we told you about before 2022 even came. We missed it by 661 points. The low on October the 13th, 22 is 28,000, 6,060 and 94 points thus far. The NASDAQ has fallen from its high 16,764.86 to 11,037.91. Hit on 6/16/22, thus falling a whopping 5,736.95 points. But the real question is whether equities have bottomed. As you can see from this chart, 48,1862 high, which definitely fits in our range. Range 4,600 to 4,900. To contact us, info@rjticharts.com, 888-521-3555.